Hey guys, it's James and we're back with QYLD. We are trying to determine how much of QYLD we would need to own to hit that $1,000 a month paycheck. We're doing this for 30 separate income or dividend ETFs. And what we do is first we go over to the ETF webpage where we try to determine what they are actually doing to hit that dividend yielding number. Then we head over to Seeking Alpha to determine what their historical yield has been, and we establish a number. We take that dividend yielding number, go over to our compound interest calculator to actually determine how much we would need to own to hit that $1,000 a month paycheck. And this is our compound interest calculator, and I know it can be a little overwhelming if it's the first time you have seen it, but we're just focusing on two areas. We're focusing on QYLD. We put in a dividend yield number that we are comfortable with, and we take a peek at this section right here. But more on that later. And then we round out the video and compare the ETF or income ETF with the S&P 500 index. So over on Global X's webpage for QYLD, let's take a look at what they're saying they're doing to hit that dividend yield number. QYLD seeks to generate income or pay you a distribution through covered call writing, which historically produces higher yields or higher dividends in periods of volatility. QYLD has made monthly distributions 8 years running. QYLD writes call options on the NASDAQ 100 index, saving investors the time and potential expense of doing so individually. So what is a covered call? Well, just a quick definition of a covered call. It involves selling a call option on a stock that you already own. So let's say you own 100 shares of Apple or Microsoft, two of the top NASDAQ 100 stocks. Let's say you own 100 shares of each of those securities, and then you sell a covered call on it. By owning the stock or Apple or Microsoft, you are covered or protected if the stock rises and the call option expires in the money. A covered call is one of the lower risk option strategies and is even suitable for beginning options investors. So that's what they're doing. QYLD is selling covered calls on the NASDAQ 100 stocks. Let's take a look at their historical yielding numbers. Over the past 5 years here, their historical yield has been anywhere from 7% all the way up to about 16%. So why has it fluctuated like that? Well, let's take a look at their dividend payouts. You can see it's been pretty consistent over the past 5 years, where about in 2017 they were paying down around 10 cents to about 13 cents per share, where today it has been more consistent around that 20-cent mark. Over the past 12 months, it's been all the way down to 17 cents, all the way up to about 50 cents. So we have to come to a one dividend yield number. So are we going to choose that 15.5%, or are we going to choose something closer to about 9%? Well, if you go over back to their dividend history, let's say that this was an anomaly. They did not expect to hit that 50 cents again like they did back in December of 2021. Let's say it was more of that consistent 17 cents to around 21 cents. Let's say it was around 20 cents per month over the past 12 months. Well, that would hit us around that 12% yielding number. So let's go ahead and use 12% in our calculation to find out how much QYLD we would need to own to hit that $1,000 a month figure. Over on our compound interest calculator, we go ahead and put in 12% for our dividend yield under QYLD. We would need around $100,000 worth of QYLD to hit that $1,000 a month figure. We would need $10,000 worth of QYLD to hit that $100 a month figure, and $500,000 worth of QYLD to hit that $5,000 a month figure. And of course, this does not include taxes. Then we come over to a website called Bar Chart. Take a look at how the QYLD has performed versus the index, and in the past 6 months, the price has actually underperformed the index. But do remember, you are getting that 12% dividend yielding number, where the index or a typical S&P 500 fund only pays about 1.5% dividend yield, and QYLD pays around that 12%. Over the past year, QYLD has underperformed by about a factor of 2 to 2.5 the S&P 500. So let me know what you guys thought of this video, today's video of QYLD. If there's anything you would like to see added as we go on with the series, or if there's anything you'd like to see taken away, let me know. Head down to the comments and leave your thoughts. And if you want access to this calculator, I offer this over on my Patreon. And with that, thanks for watching.